Hello and welcome to XP Power. It is interim results, 6-monthly report, and joining me now are the people who can put us right in the picture on how XP Power has been doing from the company perspective. Gavin Griggs, the CEO, and also David Stibbs from the financial aspect, who is interim CFO. Gavin, first of all, talk us through the headlines over the last 6 months.
We've had a good 6 months. Revenue performance up 30% year on year, so strong performance there, and it's across all three sectors we focus on. All three sectors double-digit growth, so very pleased with that performance. Ended the half with an order book of 250 million, so a strong order book gives us good coverage for the rest of the year. Orders, as expected and as previously communicated, were below revenue, a book-to-bill of 0.72. And it's just been the supply chain has been normalising across Europe and across the rest of the world. So customers are being more comfortable with the supply chain, not having to take so much orders in. And then we've had the well-documented semiconductor market correction that has impacted demand, but they're short-term issues.
On the investment front, you've been making some investments. We'll perhaps talk about that in a bit more detail in a moment, but give us the top line there.
Yeah, we've been investing in our future. We see a very strong future for us, and we're investing in a new facility in Malaysia, so a new manufacturing facility in a region called Perak in Malaysia. That is on time and on budget and will be handed over to us in June 2024. We're also investing in 2 new design centres in the US, one in Silicon Valley, focused on our customers, and one in Southern California, focused on longer-term new product development.
Okay. Now, David's with us at the moment, who's been with you for some time as Group Financial Officer, but you're going to be having a new CFO fairly soon as well.
Yeah, new CFO joins early September, gentleman by the name of Matt Webb, who's joining us from Lasico.
Okay. Before he arrives, David, it's your job to put us in the picture on the financial front, starting maybe with margins, etc.
Yep, of course. So gross margin increased by 160 basis points in the half, up to 41.8%. And we benefited from a few things. So there was some stabilisation in the supply chain that Gavin's alluded to, which enabled us to have better operational leverage during the first half, and our prior year price increase is also starting to come through and feed into the numbers. It's expected that we'll increase further into the second half and for gross margin to recover to more like historic levels over the medium term. And by the medium term, we probably mean more like 2025. From an adjusted operating profit perspective, 21.8 million profit in the first half, which was a margin of 13.6%. And that was 36% higher on a constant currency basis and 45% higher than last year as reported. There's still a level of disruption caused by availability of key components, but we are seeing improvement.
And talk to us about net debt and EBITDA, that wonderful phrase.
So from a net debt perspective, we ended at 148.4 million, which is broadly as expected, and was a modest reduction from where we were at 2022 year end. It reflects our improved profitability, but also the start of the unwind of working capital, which is expected to continue through 2023 and 2024, particularly as our inventory levels start to decrease. It was, of course, offset by the capex that Gavin has talked about, particularly in Malaysia and the USA, as we start to invest behind our exciting long-term growth possibilities. And we also made payments of dividends relating to 2022 and increased finance payments in the half. Our net debt to EBITDA leverage reduced to 2.3 times, which is down from 2.7 times at the year end. And we continue to expect progress towards 2 times by the year end.
Dividend, you just kind of mentioned it there, but what dividend?
Yep, so we've declared a dividend of 37 pence for the first half, which is unchanged year on year from last year.
I'll talk you through some of the full year expectations in a moment, but back to you, Gavin. How do you feel about that financial performance?
Yeah, as I said, it was a solid half performance, and that was on the back of a solid second half last year. So we've had 4 quarters of good performance, and it just gives us some good encouragement going forward. Our strategy's working, we're delivering to our customers, and I think things are getting better. We're working against some challenges. The supply chain performance has improved, but there's still issues within it. So we're not completely through it, but as you can see by our performance, things are getting better.
Whip us around the globe now, because you're very much a global operation. Just talk us through some of the headlines in the different parts of the world where you operate.
So North America, good growth in all parts of their business, in semiconductor industry, in the industrial tech, and in healthcare, and are having ongoing new wins in all parts of that business. So we're very encouraged by North America. Europe, things are improving. It's mixed between different countries. Strong performance in Germany, slightly weaker in the UK. We have signed a new distributor who will come to market in the second half, and that's increasing our feet on the ground. Then Asia, we have had challenges in Asia. China semiconductor industry has slowed down considerably as the sanctions and controls the US has put on in place have impacted them. But medium term, we're still very positive about it, but it's going through some challenges at the moment.
And Germany, just talk me through the operation there, because we visited there recently and it certainly looks to be a very impressive facility.
Yeah, so we've got 3 sites, key sites in Germany, with the Bremen facility, which has always been our low voltage hub, and then the 2 businesses we acquired in southern Germany at the beginning of 2022. There's FUG and Guth. So FUG, just outside Munich, has been performing very well. That's a high precision, high voltage, high power business in many interesting applications. There's a lot of investment in that site. There's a lot of customers talking to us about new innovation we can do, and it's really cutting edge stuff in the high voltage area.
And of course, Gavin, you can't talk about a serious company these days without mentioning ESG.
Yeah, ESG, as you know, has been part of our DNA for many, many years, and we've made further progress in 2023. We've signed up to the Science Based Targets Initiative, and also today we've also published our first transition report, which is our route and what we're going to do to be net zero by 2040.
Back to you, David. I know you're obviously restricted within stock exchange regulations, but before the new CFO arrives, let's hear from you on looking ahead for the next 6 months or even a year. What can people expect in the financials?
Well, I think as we've said, we're really pleased with where the first half has come out. It's broadly in line with our expectations, and I think as we look forward to the full year, our expectations remain largely unchanged. We've guided to a modest second half weighting, and I think we would stick with that for the full year.
Great. Gavin, final look ahead. What can people expect to see going forward? Hopefully, a sort of, as you said, an easing up in some of these supply problems.
Yeah, I think the medium terms, we're very, very excited about the opportunity ahead of us. All 3 sectors are very attractive to us. There's all driven by a number of mega trends that we're seeing. There's the growth in electrical usage. All products now need a power converter. There's the whole digital transformation of the globe. And then the long-term trends in healthcare all benefit XP Power's medium-term future, and so we're very positive about it.
AI, is that
AI is a big trend. Big trend. A lot of the products we supply customers who make chips, who they will benefit from AI. So indirectly, we will directly benefit from it. So there's other exciting trends in there: electric vehicles, the Internet of Things, big data. All of these trends just drive demand for semiconductors, and then in turn for the equipment that makes the semiconductors, which is what the customers we supply.
But hopefully they won't replace us anyway. Gavin, David, thank you very much. That's the 6-month interim report, financial report, and also the general look at the company from XP Power.